The stock market plunged into bear market territory shocked Americans, counting on their investments in the market to carry them through retirement. At last check, the S&P is down around 8% from where it was to start the year. We are checking in with Craig Bolanos, the co-founder and wealth advisor at VestGen. Good to see you, Craig. What's your common sense on big stock market corrections, those huge drops and bear markets?
Well, listen, it's just to gain perspective, and that's not cliche. Let's be sincere. Over the past 80 years, we've had 24 corrections. That's 24 drops of at least 10%. Over the last 80 years, we've endured, but we're still here through 14 bear markets. Those are declines of 20% or more. But what I remind everybody is let's not be passive. Let's be active. And the first rule of market VIX and volatility is you almost always get a second chance to do the right thing. Angela, you almost always get a second chance to do the right thing. So applying that to investments means if you don't have enough bonds, you don't have enough cash to generate the cash flow or liquidity you need for the next 1 to 3 years, use any of the rebound rallies that eventually will come and be sustained to go ahead and lighten up your equity position so you can sleep at night.
Sometimes it's not a bad idea to buy some stocks at bargain prices. What are some potential moves?
Well, Angela, tip number 2 is use the current market cycle, the current news cycle you refer to it as a reflective pause. And what I mean by that is think carefully now that we've been through these headlines of what you want your portfolio to look like over the intermediate term. And as you envision what your portfolio should look like, what you want it to look like, if it differs from where you're at currently, use this as an opportunity to get there. So maybe someone who missed the big rally in AI and technology stocks, find a way to start nibbling and purchasing. Maybe for somebody who isn't invested abroad internationally whatsoever, I say, what are you waiting for? And like we talked about in our first tip, if you always get the second chance to do the right thing, if you're overexposed to one sector of the market or you have too much technology, this would be a great opportunity to fade some of the rallies and lighten up into strength.
What about people who are coming up on retirement time?
Angela, it's always appropriate to try to make, lemonade out of lemons. And what I think about here is if you're in the habit of getting money to the tax-free safety zone of the Roth IRA by doing incremental conversions each year, this might be a great time to not wait till year end, but to do some partial conversions now, or maybe even work with an advisor that allows you to do Roth conversions in kind. So you can cherry pick some of those long, great held names in your portfolio, like the Apples, the Nvidias of the world that are down more than 30%. Use that as an opportunity to convert those assets in kind now that the prices are cheaper. I'm Craig Bolanos, co-founder of VestGen Wealth Partners. If you want some help getting retired and staying retired, connect with us online. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com.